Welcome to Master Your Money, a channel that empowers you to take control of your finances and unlock your income potential.
You know, most of us think that getting rich is some kind of a math problem. We think it's all about complex formulas or perfectly timing the stock market. But let's be real, if that were true, wouldn't every math whiz be a millionaire? The real reason so many smart people struggle with money is actually way more interesting. And, spoiler alert, it has almost nothing to do with what you know.
I mean, we all know the basic formula, right? Spend less than you earn, invest the rest. On paper, it's so simple. So here's the real puzzle. Why do so many of us know exactly what we should be doing, but really struggle to actually do it? It's right there, in that gap between knowing and doing, where fortunes are either built or lost.
And that brings us to the core idea of this whole explainer. And this quote just nails it. Financial success is about 80% behavior and only 20% knowledge. So the problem isn't what's in your head, it's what's in your habits. Building wealth isn't a knowledge problem, it's a behavior problem. All right, so let's break this down. We live in an age where you can Google anything. Financial information is a commodity. It's everywhere, it's free. But if just knowing the answer was enough, we'd all be wealthy by now.
Just look at this breakdown. Yeah, that little 20% slice, the head knowledge, it's important. Of course, you need to know what an index fund is. But it's this massive 80% chunk, our actual behavior, that's really driving the bus. And it proves a really crucial point. Information without transformation is completely useless.
So, the bottom line is this. Knowing you should have a budget doesn't stop you from going into debt. It's kind of like how knowing you should eat vegetables doesn't automatically make you healthier. If knowledge was all it took, seriously, we'd all be millionaires with six-pack abs. The real work, the hard work, is closing that gap between what we know and what we do.
Okay, so to really understand our financial behavior, we have to go a little deeper. We need to uncover this invisible script that's running our lives, what we call our money story. Think of it like a psychological operating system for your finances, and most of it was programmed when we were just kids.
Just think back to when you were little. What did you hear about money? Was it money doesn't grow on trees? Or maybe that rich people are greedy? These aren't just harmless old sayings. They are the seeds of our beliefs. If you hear that money is scarce over and over again, your brain installs a scarcity program. If you believe wealth is somehow evil, you might subconsciously sabotage your own chances at success.
It all starts right here, with these foundational beliefs. A lot of them are formed when we're really young, like 3 to 7 years old, and then they just follow us into adulthood, silently running in the background of every single financial choice we make.
And from there, it's a chain reaction. Those deep-seated beliefs, well, they trigger our emotions. A belief in scarcity can trigger a jolt of fear every time you open your wallet. A belief that you're not worthy of wealth might trigger a wave of guilt when you get a raise.
And this is the final piece of the puzzle. Our emotions drive our behavior. That fear, it can lead to hoarding cash under a mattress instead of investing it. That guilt, hello, impulsive retail therapy. Suddenly, you realize your spending and saving habits aren't logical decisions at all. They're just the end of an emotional chain reaction that started decades ago.
So as if our personal money stories weren't enough to deal with, we're all fighting against our own brain chemistry. There's this powerful cognitive bias, a kind of glitch in our programming that makes saving for the future feel almost impossible, even when we know it's the right thing to do. It's called present bias, and it's basically our built-in instinct for instant gratification. See, our brains evolved for survival in a world where later wasn't guaranteed. Now was all that mattered. So this ancient wiring makes a small, immediate reward feel way more exciting than a bigger, better one that's way off in the future. This is such a fascinating example of how irrational we can be. So imagine this choice. You can have $100 today or $110 tomorrow. Most people take the $100 now, but check this out. If the choice is $100 in 30 days or $110 in 31 days, suddenly most of us will wait for the extra $10. That one extra day in the distant future feels like nothing. This is present bias in action, and it is the exact reason we buy that $5 coffee today instead of investing it for our future self.
So we've got our childhood money stories and a brain that's wired for I want it now working against us. So what on earth can we do? Well, the key isn't to rely on willpower. The key is to build systems that actually outsmart our weaker future selves.
All right, here's a brilliant and super simple tool to start with, the 1% rule. The whole point is to create a mandatory pause, a cooling off period between the impulse and the action.
So if you see some new gadget you just have to have, instead of buying it on the spot, you force yourself to wait. This little pause gives the rational part of your brain a chance to catch up with the emotional part.
And what's really cool is that this rule scales with you. If you make $40,000 a year, a $400 purchase is a big decision, and it deserves a pause. But for someone making $100,000, that threshold is higher. It adapts to your life, which makes it a really practical, smart spending rule for pretty much anyone.
Now for an even more powerful strategy, the Ulysses Pact. It's named after the Greek hero Ulysses, who wanted to hear the beautiful but deadly song of the sirens. He knew his future self would be tempted to crash the ship into the rocks. So his present, rational self made a rule. He ordered his crew to tie him to the mast of the ship and to ignore his future pleas. It's a promise you make right now to stop yourself from doing something stupid later. And this is the perfect metaphor for investing. The siren songs are the market panics, the hot new trends, the fear of missing out. A Ulysses Pact is your commitment to stay the course, tying yourself to a rational, long-term plan instead of reacting to all that short-term emotional noise.
So how do you build one for yourself? It's actually a pretty straightforward three-step process. First, automate your savings. Just set up automatic transfers to your investment accounts. If you never see the money, you can't be tempted to spend it. Second, create your own rules, like that 1% rule we just talked about. And third, add accountability. Tell a friend your goal or work with an advisor. It is so much harder to break a promise when you know someone else is watching.
And this really gets to the heart of everything. The real goal isn't just about piling up a bunch of cash. The goal is to build a system where you are in control of your money, instead of letting your emotions and impulses be in control of you. That's where real confidence comes from.
When you really shift your focus from just acquiring more knowledge to truly mastering your own behavior, the impact is massive. You're not just improving your own bank account, you're breaking old family patterns. You're creating a brand new money story, one of discipline and intention that can be passed down for generations to come.
So let's just leave it with this question. Forget trying to predict the market. The single most important investment you will ever make is in designing a system to manage yourself. So what's one pact, one rule, one automatic transfer you can set up right now to protect your future goals from your future self?